Good afternoon, everybody. My name is Charles Raether, and again, I'm the managing partner and senior attorney here at AmLaw Group, where for over 15 years we've been working with entrepreneurs, investors, and talented individuals in making their successful transition to the U.S. Today, I have a special guest, a person I've known for quite some time in the EB-5 space. So today we're going to focus on EB-5 and things related to EB-5. And I think we'll probably maybe talk a little bit about Trump's proposed gold card, how that might pan out, how it might affect the EB-5 market, and talk about as well other things related to EB-5, current trends we've seen this year, what we're anticipating to see next year, and how we can best support investors going forward. So to help me with all that, we've got Ahmed Khan here from EB5AN. Ahmed, thanks for taking the time.
Yeah, my pleasure. Thanks for having me on board.
Absolutely. And Ahmed, I'm sorry, I don't know your title, senior vice president, co-COO, something like that, but you're up there,
Yeah, senior vice president. Yeah, and I'm happy to kind of.
There you go. So Ahmed, why don't we'll dive into some of the issues about the program, stuff like that. Maybe just tell us a little bit about yourself, your regional center, and what you guys have been doing for quite some time now.
Yeah, absolutely. So senior vice president here at EB5AN. I've been in the EB5 industry for getting close to 14 years now, so almost a decade and a half.
You don't have as much gray hair as I do, but you're
I just shaved it all off.
Let's
just lose the mystery. Yeah, and I started in this industry a lot like yourself as an immigration attorney. Worked on hundreds of different cases from all over the world with source of funds, and also worked on project structuring from an immigration standpoint. Ultimately ended up on the dark side, as some would say, or the regional center side. And then, wear a lot of different hats here at EB5AN. We are a very large regional center, more than $1 billion under management currently. We've, helped hundreds of investors get
probably
their,
thousands. Probably thousands.
Thousands. Oh yeah, we're getting into the thousands now. You're right. And we've got a great track record of success with our projects. We've never had a project be denied from USCIS. We've had great success on the financial side as well with a lot of our projects paying back. Some of them more so recently have started to pay back as well. And so here to just chat about EB5, the current state of things, and see how if we can help any of your clients.
So roughly, how many projects have you guys had? I mean, you've been operating about 10 years, 12 years, is that right? Or?
Yeah, so we've been around for about 13 years now, coming on to 14, almost as long as I've been practicing. And we've got 35 projects that are kind of open or completed. Prior to the rules changing in 2022, we had 10 projects. 4 of those have repaid. After 2022, now we've introduced a steady diet of good deals under the RIA, Reform and Integrity Act. 25 of those projects, I think 20 of those have already been fully subscribed. So we've sold out of a bunch of deals, and we've got about 5 or 6 that are currently active and available for investment.
And you guys are very different than some other regional centers, well, in a number of respects. Partially, it seems like you have more of a B2C business model, right? I mean, you guys tend to work without agents. You try to work directly with clients. I think you guys do a lot of events in person, don't you, in the U.S. and other markets as well?
Yeah. We try to be direct to consumer, as you kind of called it, and it's challenging because really what we have to do is be knowledgeable enough to talk to the clients individually and explain all of the different deals that we have. I think what you see in EB5 space often is a lot of regional centers that have 1, maybe 2 deals that they're selling, and everyone's kind of got the talking points or the bullet points that are really, that what everyone thinks is important, and they just go out there and kind of push that onto the client and try to fit everyone into it. Like I said, we've got 5 or 6 available, and really what I try to do is listen to different clients, understand what their priorities are. Some clients are looking for faster immigration process, and there are projects that will achieve that. Others are looking for maybe a higher financial return, and there are projects that are right for that. And there's always going to be some give and take. The Venn diagram of a project that's going to, get you your green card very quickly, get you your money back very quickly, get you a high return, be very safe. Those are separate circles. You're always going to have to give something up to get something. But the idea is to find that right balance for each individual client and then make a recommendation based on that.
And I have to add to this, and it's not, this is not a paid promotion here, but you guys have always been great to work with in that, like you said, you have multiple projects at any given time, probably a minimum of 2 or 3, and sometimes as many as 4 or 5, like you mentioned. And so clients, you're able to kind of customize an offering for clients. Or I shouldn't say you customize it, but you have so many different offerings that have various factors, whether, it's a faster return of capital or it's a rural area, faster adjudication, stuff like that, that you kind of have a flavor for just about every day of the week, more or less. So that's always, I think, a big benefit for our clients when they're working with you guys. So let's talk about maybe what are the trends you guys have seen? So obviously, we're the attorneys, we're kind of, slaving away, doing these, boring petitions, getting that stuff. You guys are doing the sexy work out there, putting the projects together and all that stuff. What have you seen? What major trends have you seen over 2025? Um,
Yeah, I think this year we could call it the year of rural, right? Whereas previous years we really saw a lot more volume on the high unemployment area side. And so in EB5, you've got those two options primarily, where you've got high unemployment area projects and rural projects. Both of them are at that lower investment amount of 800,000. One just gets what's called priority processing. And I think that once enough people invested in those first 2 years of the RIA and we saw kind of what that priority processing meant, which none of us really knew what it meant because it didn't say anything. We were seeing people getting approved in less than a year pretty consistently, whereas high unemployment cases, still getting approvals, but definitely a longer time period to get that first approval in hand. And so what's kind of surprised me was, people who had traditionally been kind of very against going into rural projects because they were not from traditionally backlogged countries, even they started saying, you know what? Rural is kind of where it's at because we're seeing these fast approvals. I don't want to be in the background waiting for my approval or have to file a mandamus and poke the bear and do all this other stuff. I want to get results, and rural projects seem to be doing that. And so we've seen a big trend or a shift, I'll say, of people kind of going towards rural projects. I still think that there is a great market for high unemployment deals because there's just more of those that exist. And so as a regional center, when we're going out and we're looking for projects, rural projects that are safe and, meet the criteria from an EB5 perspective and are, attractive really to investors, that can be a real challenge. But on the high unemployment side, we can check a lot of boxes that investors are looking for. So I will say that the trend this year has definitely been a shift towards rural projects, primarily driven by the results on the immigration side of things. But we still get a large number of clients that are opting for our high unemployment deals, um, just to get slightly better financial terms for the most part in those deals.
So is it true that the majority of your deals recently and maybe in 2026 are probably going to be rural or not necessarily? I mean, how's that product mix? And it maybe depends.
Yeah, same thing, right? So if you talk about inventory, so the amount of spots that we might have available, I think we definitely will have more rural spots. When you think about the markets that dominate EB5, you're always going to think about India and China. And it seems like not necessarily because of priority processing, although that's a part of it, but also because it's also the category that has a larger set aside, meaning more green cards available. People are kind of assuming that a backlog could come soon, and they're taking their bets on the category that's a little bit larger, assuming that there's the same amount of applications in both. So we will have usually more rural inventory, more spots in various projects, but we like to keep both rural and high unemployment on the shelf because, like I said, clients from Europe, from Latin America, from Canada, from parts of the Middle East, they show, and even in East Asia, like for example, Korea and Taiwan, we get clients who want recognition. They want to work with big developers in cities or areas, urban areas that they're very familiar with. And that's where their clients are looking for investments. And so high unemployment still serves a very important purpose there.
Interesting. Interesting. Well, talking about set asides, as you mentioned briefly, and retrogression, do you have any insights? I mean, we understand nobody has the crystal ball, but a lot of our Indian clients are really worried about this. What are your thoughts about potential retrogression for Indians and other?
Yeah, yeah, and we were probably one of the first ones to cry wolf and say, oh no, there's a backlog coming. And I think a lot of people got, now they look at us and say, oh, well, these guys were just trying to create demand. And look, at the end of the day, we were basing that assumption off of a warning given by the government on the Visa Bulletin. So the Department of State saw the same thing that we were seeing, which is a large number of applications coming in and becoming pending at USCIS, and something's got to give, right? There's more applications, more people pending, not enough green cards to be given. that's how a backlog occurs. Now, the phenomenon that we've seen over the last year is just speed of adjudication, not at the 526E level, which has been pretty consistent, which is step one, basically, you can think of the EB5 process, but the second step, getting the green card. And I think primarily where we're seeing the delay is at the National Visa Center, which you and I both know is impossible to deal with. And then even once you get through that process, the consulates abroad are also not issuing green cards at a very fast clip. And so because they're not issuing green cards quick enough, they're not using up all the visa numbers that are allocated for a given year. And that's how we've ended up with thousands of people who are pending in each of these categories, but no backlog appearing on the visa bulletin because enough green cards haven't yet been issued to kind of test those numbers. Now, I'm still on the, I'm kind of in the middle. I think there's a best case scenario and a worst case scenario. And like most things in life, the reality will probably be somewhere in between those two. For Indian clients and Chinese clients, I think you always have to, kind of consider that there could be a backlog when you're going into this and make peace with that. But to me, if you're Indian, you're in EB2 with a 2016 priority date, you're 50 years away from getting your green card. If the worst case scenario for you here is like a 5-year wait to get your green card through EB5, that's still a major
Yeah, yeah,
improvement
yeah.
in my
It's a big
eyes.
improvement. Absolutely. Right. Do you think from experience, and I can't remember, in the past, I mean, if and when it will retrogress, it seems to me it's a relatively small period of time, isn't it? I mean, it's not going to go from, current to, 1 year retrogression or something, right? I mean, it's more kind of, a matter of months from what I recall, or what do you recollect?
Yeah, well, yeah, usually it's a couple of years. And the worst case, and that was like we saw with India back in 2019, I believe it was when it retrogressed, and we saw it kind of go back to, I think you're probably right, maybe 2018 at worst. They go by what they go by filings, right? And so we've seen two pretty big spikes in filings. One happened in 2023, right before the cost of applications went up because of the USCIS filing fee. And then we saw actually the second spike happen this year, when President Trump announced his gold card idea, and people panicked and wanted to get in before any changes happened. And so we saw a big rush in Q1 of this year. So my guess is, probably maybe early this year is how far back that backlog would go. And a worst case scenario would be maybe even till to 2020. Maybe it probably won't go back all the way to 2023, but maybe early 2024 or something
Right,
like
right,
that.
right. Yeah, yeah, I gotcha. Well, you mentioned the gold card. We'll get to that in a minute, because it's hard lately to discuss EB5 without somebody or clients, also bringing up the gold card. So we'll talk about that in a second. But are there any trends that you guys are anticipating for 2026? For example, filing fees have gone down recently as a result of that lawsuit. I'm not so sure that's going to cause a spike in applications. I mean, it's nice news. You can save, maybe 8,000 on your initial filing. But do you have any other anticipations, either demographically or where you see the market moving in the next year?
Yeah, I mean, look, the big kind of date that's looming over all of us is September 30th, 2026. And for whatever reason, when the Reform and Integrity Act was extended through September of 2027, they only kept the grandfathering clause, which was a huge deal, right? In the past, you filed an EB5, the EB5 program kind of sunsets, and you don't know what's going to happen with your application. And the grandfathering clause kind of fixed that. It said, look, you file by this date, you're going to be protected no matter what happens in the future to the
But I
program,
could never
whether it
understand why it was
ends.
September 2027 as well. Can you enlighten us?
Exactly.
I don't
And
know.
then so why they made that sunset date or the grandfathering date a year earlier than the sunset date of the program is beyond any of us. I've heard everything from, it being a typo to, all kinds of, but what's interesting, about that is if you read it carefully, January 2027 is also when we can see an increase in the price. So there's a built-in price increase in the RIA, and that's actually not waiting until September 2027. It's actually in January. So there's all these kind of nuances to this, but really what it boils down to is September 30th, 2026 is kind of a date that you know for sure it's going to be 800,000. You know for sure the rules that you're filing under, and that's what's going to protect you from future changes in the program. So I do think that, from we'll just say June to September of this year, it's going to be mayhem.
Yeah, I think
And just having been in this industry for as many years as we have, we know that if you're just starting to explore EB5 today, you need to get moving ASAP, because what you don't want to do is kind of put it off, wait until April, it'll be April before you know it, and now you're trying to hire an attorney and everyone's, just fully booked up with other people who have already hired them and wanting to move forward and get their filings in before everybody else.
Yeah, I think people always underestimate the amount of time that's required. I mean, even this month, we've had several clients that said, "Hey, we want to do this. We want to get, start the EB5, and we want to file by middle of January, right?" So we got holidays coming up. It's less than a month away, and I'm thinking, what are you guys thinking? Even the best,
Yeah.
case scenario, it would be very difficult, and I think people
And
always underestimate. Go ahead.
I 100% agree with you. And I mean, we both, toiled through some of these source of funds, and every client thinks their source of funds is easy. 100% of the time it's not. One other trend that I think that is going to stick around, and we've already seen it happening in the latter part of this year, is this administration is going to get tougher on everything. Whereas under the Biden administration, I think that there was, I won't say that they were turning a blind eye, but there was a lot of deference given to immigration attorneys and their perceptions of things, and the way that we presented materials to USCIS, everything from partial funding, all the way up to just how deep you have to go down the rabbit hole when you're talking about properties that were purchased years ago. Well, we've seen a lot of tougher kind of takes from this administration. And now more than ever, I think conservatism when it comes to source of funds is going to be pretty important. And I think that, people are going to continue. There's a ton of pending applications that were filed during the Biden administration, especially in the HUA category, that are now going to be adjudicated by Trump adjudicators. And so, they filed with things like RC loans, which we've now seen denials for, really lenient partials, which we've started to see pushback on. So I think there's a right way and a wrong way to do everything. And I think you've got to have a good attorney at your side, someone like the esteemed Charles Raether, to really walk you through kind of the ups and downs and navigate the ins and outs. But I think that that's something that we're gonna be seeing a lot of.
Well, I think you're right. And as you know, probably the majority of our clients are Russian. So we tend to have a lot of clients from that market. And that's a very, how would you say, exotic market to begin with. There may be a specific, right, because of the conflict with Ukraine, because of the sanctions, right? There's a lot of factors affecting Russian investors that might not be relevant for Indians, Canadians, Brits, and stuff like that. But I have to agree. And so we're seeing definitely more of the more rigorous and challenging RFEs. And sometimes we're not always sure, is this because they're Russian, or this is just a general trend? And speaking with you, it sounds like it's certainly a general trend. It's not focused solely on Russians, although I think they ask a lot of questions of Russians that they want, of other nationalities, like, have you worked for the Defense Department and for the Russian Federation and stuff like
Right.
that. So I think it's across the board. I don't know what you think about the stats that came out indicated, I think, since the IRA was passed, there's a 97% approval rate. I find, me and my colleagues, we find that very hard to believe. I don't know what you guys think, but maybe it's true. I guess.
Yeah, I'm kind of with you, but the interesting thing about approval rates is they don't take into account pending rates, right? And that, to me, we saw that IUSA has been doing great work behind the scenes, kind of gathering data and publishing it for the industry at large. But one of the kind of glaring holes when they put out that report last year that said, like, oh, adjudication timelines for high unemployment projects is only 14 months and rural is like 12 months.
Yeah.
Everyone's like, wow, that gap is like really close. I'm like, well, it doesn't take into account anyone who's pending. And
Yep.
sure enough, like when the next report came out, they were wildly different. And it's like, you always have to take that into account. So I'm with you. Some of the guesswork has been taken out of EB5, and I think that's a really good thing. The 956F, we all remember the 924s that just kind of sat around and never got approved. The exemplar process is not new. But the fact that USCIS actually started adjudicating 956Fs and giving investors that clarity before they even invest, that the project at least portion of this process is approved, now it puts investors in the driver's seat, and then they have to listen to their attorneys and provide the documents that they need from a source of funds perspective. But the chances of success, I think, have gotten exponentially higher as a result.
Yeah, absolutely, absolutely.
97 does sound like a lot, though.
I mean, from our practice, we're above that level.
Right.
But there's a lot of attorneys too we run across. We have clients come to us. They work with attorneys that turns out this was their first or second EB5 petition, and
Yeah.
it can be.
I think
ugly.
it goes without saying that over the next 9 months, I would not, as much as I want new attorneys to come up and be in this space and practice, when your back's against the wall, which everyone's will be over the next 9 months, I think working with an attorney who's been through it all, seen the ups and downs in EB5 is it's quintessential. It's mandatory.
Yep. Yep. So let's maybe shift the discussion briefly to the gold card. As I mentioned, at least with our clients or potential clients, almost everybody in the same breath they ask about EB5, they talk about the gold card. And, before this recording, we were talking a little bit, off the record, without a recording, about this. And I'm curious to hear, your thoughts. And, clients sometimes come to us, I think even Lutnick, with the White House, you got to be really careful. Anything that's coming out of the administration these days. Clients are citing articles on CNN where Lutnick's supposedly on a Fox, interview, which again brings it into question, the veracity of what's being discussed there maybe. But, he said something like in February of 2027, they're going to redo the EB-5 program. They're going to renegotiate it. I don't understand how the White House is going to renegotiate the EB-5 program. But what are your feelings, Ahmed, about, the gold card? Is that going to pose competition for you guys, and how are you going to deal with it?
Yeah, yeah. Look, I mean, I think that today, and being an immigration attorney myself and reading through the presidential proclamations and kind of understanding the mechanism for the gold card, it doesn't seem one like it's feasible, to be honest. And then two, I just don't know who would really opt for the gold card over EB5 as it's currently written. But I do agree with you. Almost everything that this administration has done has been some form of power play. And if you look at it more as a bargaining chip for future legislation, it starts to make a lot more sense. Uh, I don't see it as competition today against EB5. I don't think there's any competition because really what you're doing is you're donating money with no chance of getting it back for other categories, EB1 and EB2, which are pretty similarly aligned for most people. If you're backlogged in EB1 and EB2, you're definitely, it's not going to be an advantage for you. And if you're not backlogged in EB5, chances are you're not backlogged in EB1 or EB2. Um, and so, but I agree with you. I do think that what we could see, after the sunset of this current RIA program is, the administration taking a hard look at what they want to see the next iteration of EB5 be. And there are other programs around the world that do, this donation model versus an investment model. Some of them do both as an option. These are all things that I think suddenly are on the table, whereas a year ago we wouldn't have even thought about it. So I think that's what's happened is we're probably seeing the end of the EB5 program as we're probably used to seeing it. I don't necessarily think that that's the end all be all, and I don't see an investment option going away completely because you and I both know that this program has benefited the U.S. economy the most. U.S. developers have benefited from EB5 capital more than anyone else in this industry, except for maybe EB5 brokers. But 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 the reality is that it benefits our economy, it creates jobs, and I think that that's the aspect that the gold card doesn't accomplish at all. And any kind of donation that goes to the U.S. Treasury is not going to accomplish at all. And so I don't see that going away either.
Yeah, that's a very good point. That this might be part of a negotiating tactic or strategy that Trump's pushing forward. I think partially it's maybe his ego too, because I suppose he can say this is the Trump gold card as opposed to the EB-5 program that's been around for decades. There might be something in that too, but I agree. And the fact maybe politically he could say, hey, we're paying down the U.S. deficit with this gold card, but believe me, $1 million is just a drop in the ocean. Given given our current budget
Yeah,
situation.
yeah,
Uh,
yeah, absolutely. It's not really going to do much
yeah,
for
yeah.
that.
And I think the other thing
And I
too.
mean, I
Go
mean,
ahead.
ego. I mean, what you think he did it to get his face on the card? Maybe, maybe not.
No, maybe not, but I think there's always a little bit of an ego trip with a lot that our president does these days. It seems like, um, but yeah, and I think people need to take a hard look at the financial, cost too, because we're looking at $1 million per person. This isn't per family like the EB-5. So you got a family and two kids, you're looking at $4 or $5 million. I'm not so sure residency in the U.S. is worth it. And you look at the fees involved, and I think people also have this misconception that with the gold card, they're not going to have to prove the source of funds. And I think you and I know that's most likely not going to be the case. There's going to be scrutiny as well, probably at the same level as EB-5. So we'll see. We'll see how this all plays out. And that's an interesting insight that you had, that this is maybe just kind of a negotiating tool when the RIA comes up for renewal and stuff like that. So we'll see. We'll see. Um, let's see. We can take a pause here because we'll have to edit this anyway. Let's see what else. Anything else? I didn't necessarily bring up the Wahali thing. I mean, I don't see. We don't need to. I mean, it's
Not in the context of this conversation. Yeah.
um, tell me how comfortable you feel about to what extent you can talk about current offerings, or only vaguely, or you can't even get into any of that. I mean, what you,
No, I mean, we can publicize widely actually because we do 503C or whatever it
you
is.
do? Okay, all right.
So we're open.
Okay, I'll ask you a couple questions about that then. Okay.
Okay.
So Ahmed, why don't you tell me a little bit about some of the current offerings you guys have with your EB5 projects?
Yeah, absolutely. And what I'll do, I'm not going to talk about all 5 or 6 that we've got available, but what I can do is kind of break it down by category. And I think that for the rural side of things, we try to stay very, very conservative in the way that we structure these deals. And they're all going to follow a pretty straightforward formula. They're always going to be residential. We believe in the residential market in the United States. We'll kind of seesaw between some multifamily, maybe some single family and things like that. We like projects that have already been under construction. We don't want to deal with any kind of permitting risk or entitlement risk or projects that just haven't gotten off the ground yet. I know a lot of people throw around the term, senior loan. We do want to be senior. We want to be as senior as possible. We want to be the highest priority for repayment, but we would also like there to be collateral that kind of make sure that whatever money is going in, there's more than that kind of available in the project as part of our collateral, so that in the event that something goes wrong, we can go after it and get our money back. And it ends
Generally,
up being a
are
little
your
bit of a
projects? Are
game.
you guys? Are your EB5 investor generally in a mezzanine position? I presume after the primary bank loan, or do you sometimes have projects where the EB5 is in first position?
We're almost always on the senior side, almost always in the
Oh, really?
senior position.
Okay.
So really, what we're looking for are deals. The two deals that I kind of suggest to investors first, Bay Creek and Grand Park. They're both senior deals where the developers got to where they are today, which is more than 200 homes sold in both, with just their own equity. And so they've built this thing up from scratch using their own money. If they did use loans from the past, those loans have been now paid off, and we're coming in and essentially allowing them to use cheaper than traditional financing EB5 capital to continue to expand their existing project, which already has a proof of concept, already has sales, already has people living there, etc. So just yeah, it's a great value proposition for investors because they're seeing something that's already under construction, in a lot of ways successful, and all they have to do is continue to do what they've already done, versus kind of reinvent the wheel, do something that's never been done, and hope for the best, especially in today's economy. Um,
Question. Sorry for interrupting. Do you guys? Are there any geographic locales, states that you guys prefer working in as opposed to others?
Yeah, we've kind of, so we're open to anything. We'll do a project anywhere in the United States. Our regional centers, we operate a I guess collection of regional centers that cover the contiguous 48 states in the U.S. We have ended up doing a lot of projects in the southeastern United States. That I live in Atlanta. This region has experienced a ton of. You're in Florida. You've seen the amount of growth that the southeastern United States has experienced, especially since COVID. People are just looking for lower taxes, a better quality of life, things like that. And so we've seen a big influx of residents moving into Atlanta, Charlotte, Florida, all Tampa, Orlando, Miami, Fort Lauderdale. And so a lot of opportunities there. For rural projects, we've also ventured out west, and some of the big locales there, Jackson Hole, Park City, the ski areas
Yep,
around
the ski
Denver.
resorts. Yeah.
There's a lot of those, and even in those ski resorts that we're looking at, we try not to. We're not getting into the ski resort side of things. They have been very successful the last few years with the advent of Icon Pass and some of the other passes that are creating like membership style kind of amenities for folks to go out and ski. But again, there's as those ski towns or those ski areas continue to grow and attract more and more people, the people want to buy homes there, people want to buy condos there, people want to buy real estate there, and that's an opportunity that we've taken advantage of a couple of times now.
So outside of the ski resorts, and I know that's been a very popular model the last couple of years with you guys and some other regional centers for rural projects, is there any kind of sweet spot for you guys? Because sometimes we have to explain to clients when we say a rural project, they're thinking this is going to be, a dairy farm out in a cow pasture or something. Um, we've had projects with you guys in the past. I mean, as I recall one, it was, maybe a distant suburb of Atlanta. I mean, is it true? It's kind of like the exurbs that you kind of deal with, the distant suburbs of large metropolitan areas that qualify for rural, but in principle, they're, 30, 60-minute drive to an urban area. Is that
That
correct?
that's exactly right. And sometimes you got to get a little bit lucky. I'll be honest. And that project that you mentioned, Twin Lakes, one of our most successful projects. We have over 400 investors in that deal. We did a very similar project just this year by the same developer, almost the same type of development, but outside of Charlotte instead of outside of Atlanta, and that also has over 160, sorry, over 200 investors in that project as well. And yeah, what happened with those? Those are basically just single family housing neighborhoods for active adults, people who are over 55. And it's with a big developer who we've worked with for over 10 years. They've got a big, $40 billion portfolio. And it just so happens that they look for this particular type of product, the active adult single family houses. They look for areas that are adjacent to big metropolitan areas, but maybe in an area that's a little bit more up and coming and a little bit cheaper and a little bit more of a value add for themselves and for their future buyers. And so, yes, Twin Lakes, just an hour from the Atlanta airport, you literally drive through the entire Atlanta metropolitan area, and just when you step outside that, you end up at Twin Lakes. That area in a few years will not be rural. It's already bustling. There's a ton of other homes and developments that have popped up since Twin Lakes started there. And that's, it's a little bit of luck. It's a little bit of just knowing the game. And Coulter, the developer that we work with, they've been doing it for 30 years. They're really good at identifying those locations. And yeah, it just so happens that a few of these locations have worked out from an EB-5 perspective.
Yeah, yeah. On the fund side, so with rural projects, at least with your regional center, is the return of funds does that generally take longer on rural projects than say an urban project? From my experience, it seems
Yeah,
the case. Yeah.
they do. And we try to stay away from individual milestone events for rural projects. So we're not banking on a hotel being built and being very successful and then ultimately being sold or refinanced. We're not banking on a condo building being built in the middle of nowhere and all the units have to be sold for us to then recap the capital. What we're trying to do instead is spend, a small amount of the total project cost, achieve a little bit of success. Maybe you're building 30 or 40 homes, you sell those 30, 40 homes, you get the capital back, and then you use it again to build the next 30 or 40 homes. And you do that in a kind of a capped amount of time. And so for it to be worth it for the developer, they're not going to just, build 30, 40 homes in the course of 1 year, sell those homes, and then give the money back. It doesn't work for EB5 from a sustainment period perspective. It doesn't work for the developer because why would they take on that debt to just turn it around and hand it back in just 1 year? But where the sweet spot kind of lands is kind of in that 5 year timeline, using that money a few times over, getting the houses built and sold, achieving that cash flow, and then ultimately paying the investors back. So by their nature, they are a little bit longer. Typically, I would say 5 to 6 years is kind of the sweet spot for a rural deal. For our high unemployment deals, that's where we can be a little bit more creative. We can find, deals that are single asset, talking about a apartment building in a bustling metropolis that just happens to fall under a high unemployment area. That's gold, right? You're now building something that's a very easy asset class to ultimately sell to a REIT, a real estate investment trust. Once it's been built and rented, it's easier to stabilize. And you can count on, okay, if X happens, then the repayment will occur and still feel pretty good about your investment. And usually those are shorter, typically in a 3 to 4 year timeline.
Correct. Yeah, I've seen you guys have had some relatively aggressive time frame for urban projects. 3.5, 4 years,
Yep.
which is very appealing.
Yeah,
Right.
the rule came out that you can return money after 2 years of
Yeah.
sustainment. I think the jury's still out on whether that's codified yet, but in terms of for investors, this is great. But the first question that we got was like, okay, well, where's the deal that pays me back in 2 years?
Right.
And my answer was it doesn't exist.
Right.
There's no such thing as we also need 2 years of construction to get the job creation that we need. And so to find a deal that is built and on the first day that it's, finished, sold, it just doesn't exist. You got to have at least a year of stabilization. Sometimes it takes months to get the sale, completed. And so you end up in that 3 to 4 year timeline. And that's as fast as we could do it.
Yep, absolutely. Well, thank you, Ahmed, for your time and kind of these insights. It was a pleasure having this discussion with you. And as we've mentioned, we've worked with you and your team for quite some time, and look forward to doing so in the future. So hopefully we will maybe do this in the next year, 2026, and hopefully, continue working with you and with investors and helping them successfully make that transition to the U.S.
Yeah, always a pleasure. Thanks for having me on. It's a great conversation when, we're kind of both just going back and forth. And yeah, look forward to working together much for many more years in the future. Hopefully the gold card doesn't replace
Oh,
us.
absolutely. I'll share some of my gray hair with you if you need it, if it doesn't go back.
Please, I'll take all the air I can get.
All right. Sounds good. Thank you.
All right.